You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together. It is time for TWIFO. This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, available pretty much everywhere on demand. So all the platforms out there, including even your Audibles and your YouTubes and everything else out there. So no matter where you like it, it's available. If you want all the archives of all of our shows, I recommend our website or indeed our mobile apps. Come the easiest places to get those with no gating in your way. You can go back all the way back 15 years nearly worth of shows if you are so inclined. So that's a great way to go deep into the archives. Of course, if you want to go above and beyond, get more in your lives, including live throughout the week, as well as our pro Q&A sessions on Tuesday, Options Oddities on Fridays, and a whole bunch more. Our upcoming Pro Trading Crate October monthly giveaway as well. Awesome bespoke one-off crates full of all sorts of fun stuff. Then head on over to theoptionsinsider.com/pro. What's going to be in this month's crate? We don't know. We haven't built it yet, but I'm looking at a whole stack of stuff that could potentially go into it. So get on over there, join the club, and join the party. It's pretty fun over there. And of course, however you listen live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do love to hear from all of you folks out there. Let's see who we're hearing from on the old show today. Doing double duty, holding down the FTSE Russell and CME hot seats. Don't worry, he's more than up to the task. Mr. Dan GRAMZA, the president over there at GRAMZA Capital Management, and guy who makes one or two cool YouTube videos every now and then as well. Mr. Dan, welcome back to the program, sir. It has been too long.
Hey, hello, Mark. It's great to be with you. Yeah, it has been a little while. I always enjoy a chance for you and I to explore some markets together. So I'm really looking forward to today.
Well, we got a lot to explore this week, so let's get to it. It is time for our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers, the portion of the show where we highlight everything moving to the light side, a.k.a. the upside, and to the dark side over there at CME this week. Mr. Dan, you know the deal right now. Where should we begin our journey this week, sir? To the light side or to the dark side?
Well, gosh, there's so much going on. How about if we start to the light side?
I had a feeling you were going to go that way. It's a good choice in either direction this week. We got something to talk about pretty much everywhere. By the way, listeners, you folks can see these reports for yourselves. CME always tweets them out before showtime, so give them a follow over there. If you're not already at CME Group, or we retweet them. If you're following us, you should see them as well. If you're not set up for the premium quick strike, that's the only way you're going to see the Movers and Shakers reports for yourselves. I recommend you check it out just to see what's going on out there week on week, listeners. And coming into showtime, it is a pretty active week. To the light side, we go first. Cost you about 5.4% to break into the light side this week. That gets you to, once again, our old friend, the yen-denominated Nikkei. It's been moving a lot lately. It's been in our Movers and Shakers report a lot. I do wish we could sink our teeth into it more, but there's not really any options going up on that. So unfortunately, no joy out there, even though it is up 5.4% this week. It was number 2 in the same direction last week, up 6%. So a good couple of weeks for the Nikkei, but no joy out there. Number 4, KC Wheat, up 6.16%. I got a feeling we're going to be seeing some more ags on the top 5 this week. Number 3, it's corn, up 6.62%. It was number 5 in the same direction last week, up 3.63%. So you're closing in on 10% to the upside just in the last couple of weeks there. So good run there for corn. Oats, outpacing corn, up 8.26%. It was up 4.25% last week. So you're talking 12.5% in 2 weeks there for oats as well. And number 1 with a bullet, you could probably guess this one. We were talking about this on some of our other shows earlier this week. It is very much inescapable these days. It is NatGas, up 15, almost 15.25%, 15.23% right now. It was number 5 in the other direction last week. It was the bottom of our bottom 5 last week. It was the bottom of our dark side, off nearly 10.5% last week. So this one has been exhibiting some volatility, to put it mildly, of late. These days, if you have to guess what's kind of top of the movers and shakers, NatGas is a pretty common one up there. You can easily guess NatGas or Bitcoin or lumber, or perhaps you throw iron ore in there as well. Usually you have a pretty good chance of one of those 4 being at the top of the list somewhere. And this week, we got 2 of them. So we shall see. Let's go to the dark side now. In fact, 3 if you go to the bottom of our dark side, because number 5 is Bitcoin. It was our winner chicken dinner last week, up 11.42%. It was our number 1 to the light side last week. This week, taking a bit of a break, off 2.42%. Of course, you've been paying attention to all the madness going on in the world of crypto this past week and change with the launch of BITO, or BITO, whatever you want to call it out there, as well as, of course, the Valkyrie Fund driving a lot of paper on the CME futures, and indeed more paper on the options as well, which is always good to see. So a lot of action out there in Bitcoin, even though the big dog taking a bit of a break this week. Number 4, platinum, off to the metals here, off 3.08%. Number 3 is copper, off 3.42%. Number 2, the Eurodollar is off 4.82%. It was number 1 to the dark side last week, off substantially last week. And then number 1 with a bullet this week is lumber, one of our other frequent offenders there, 7.81%. So in today's movers and shakers, we've got 3 of our 4 frequent offenders. The only one we're missing is iron ore. It seems like that one maybe has tapered off a little bit for the time being, but we shall see. The time for trading here is upon us. Let's get to it now. Mr. Dan, sir, a lot to unpack. We got a big bullseye, big target there on NatGas. What do you think we dive into energy first, sir? What do you say?
That sounds terrific.
It's time to tap into the deep options well of black gold, Texas tea, NatGas, and more. It's time to talk energy.
All right, everybody, let's do it. Let's dive on into energy. You guys know to get these reports in your hot little hands. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work. Both of those should get you to our reports. And once you're there, go to that drop-down list there in the asset classes, listeners. Head on over to energy, and you'll see right below crude oil, you will see NatGas. Click on that, and you can begin your journey right along with us here today. You see coming into Showtime, listeners. NatGas at about 577, so back up about 5.75% just this week, just since Monday's session, of course. You go all the way back to last week's show, it's up 15 and almost 15.25%. So it's been quite the run for NatGas. You know, Dan, I'm sure you've had a lot of people asking you about NatGas. I'm sure it's been featured in a lot of your videos these days. How can it not? It's inescapable. It's kind of the big story out there in the commodity space right now because so much has evolved in this marketplace just in the last few years. And it wasn't that long ago, NatGas, I wouldn't say it was sleepy. It had moments when it could spike and move around, but it usually had a range that it kind of traded in. And it was kind of a predictable commodity because it was so siloed here to the U.S. But now we're seeing LNG shipping all over the world. We got Chinese demand, we got European demand, all sorts of things that are driving U.S. NatGas prices all over the place. So it's a very topsy-turvy market these days. What are your thoughts on what we're seeing out there right now in the crazy volatile world of NatGas, sir?
Well, you know, Mark, I have to tell you, I look for this market to strengthen. If you look at global demand, it hasn't gone away. If we start with Europe, and first, let's step back a minute. You brought up a really good point, and that is it used to be, $2, $3, and it stayed in this sideways range. Before that, it was trading as high as $12. But as our supply built up in our country, as we had fracking that allowed us to grab some nat gas that was there that we hadn't had before, we had tremendous amount of supply. And then at that point, people said, well, let's sell it to Europe. Well, Europe was getting squeezed by Russia through the Ukraine. Remember when they said we're going to turn off the pipeline? At that point, we did not have export facilities. There was no import facilities in Europe. Well, Germany has those import facilities. Poland has them too. And what that means is that we can now send that gas to that part of the world. But let's look at what's happening right now. Putin came out and said, something to Gazprom, which is their natural gas company. They said, give some more gas to Europe. And in some ways, people feel that Russia was kind of squeezing Europe because they wanted approval for that Nord Stream 2 pipeline. That way, there's 3 pipelines that go to Europe. The big deal about that is it bypasses Poland and the Ukraine. It goes Russia, Germany. So that could be one of the dynamics. What we see is Russia's, lightening the load a bit. They supply the vast majority of natural gas to Europe. The other large supplier there is Norway. Norway produces a lot of natural gas and it's energy drilling. But if you look at electricity in Norway, 92% of it's done by hydroelectric. They don't use natural gas. So they have fairly cheap electricity. In fact, in October, they opened an underground or undersea line to the UK for electricity to kind of help them a bit to lower some of their cost. So that's some of the issues that we have there. We can send that gas there for LNG. But here's the other challenge. As you know, Mark, what we do is we take natural gas, these molecules that are in this gas form, we squeeze the heck out of it. So we put it under high pressure, low temperature, so those molecules don't bounce around so much. And now we have a liquid. Now, our capacity in the United States to do that process is that capacity. So we don't have a lot more room to produce a lot more LNG. Now, let's do this. If we are going to send LNG around the world, where should we send it to? Now, if we look at our friends in Europe, if you look at the UK or the European Union, if you look at those countries, they're paying what we pay $5 for, they pay $25 for to $24, depending on what part. If you look at Asia, you mentioned China. If you look at Japan pays $28. So now let's say we squeeze some of this natural gas to get liquid natural gas. We're going to send it. Where do we send it? Do we send it to $28 or do we send it to $25 or $24? That's also part of the issue. It is that global demand that we see here for nat gas. That is why this market mystifies me. You mentioned 577 about where we're trading. I really think we should be above 650. And what we've been in for the last few weeks is a sideways move between 650 and $5 on the low side. And we're about in the middle of that range right now. But I think with global demand, we're going to see a further movement to the upside. That's my bias. But, price dictates what we do. I may have an opinion, but what determines what we do is price. And if this market's going lower, then you and I want to be on the short side if we have that idea of going with price. And for me, that is my final determinant. If price is going down, I want to do something to take advantage of that. And if it's going up, to put myself on the long side. The other area that we're seeing impact when it comes to nat gas is we're seeing it in the chemical industry and the steel industry, especially chemical. We're seeing some of that industry slowing down a bit. There is a certain break-even point when it comes to nat gas and their cost. A third of the natural gas that we produce in the United States goes to those heavy users of natural gas, the steel industry, chemical industry. So we're seeing the chemical industry slowing down a bit. We use another third to heat our homes and to cook our food. The northeast part of the United States, some areas there still use heating oil. They don't use natural gas. But the rest of the country, basically, we need that commodity. So if the other aspect is as we come into the heating season, the feeling is that the demand domestically is actually going to increase because the expectation is that we're going to have a fairly cold winter. So we're seeing that reflected in some of the actions in terms of anticipation for nat gas. So my bias, I'm bullish on this market because I think the fundamentals support it. From a trading point of view, we're down today. It's going to be important to see what happens next week. If we can stay above 550, 560 in the next three trading sessions, then I think we have a chance to go back towards that 650. So it'll be interesting to see how we behave over just the next few days.
That it will. Let's see how we're behaving right now. Like I said, go out to that nat gas drop down for yourselves, listeners. You can see what is lighting it up out there in our TWIFO report. An active week, not quite a 400,000 contract week on the tape for nat gas, listeners. Almost 295,000, I should say, out there this week. So about 100,000 shy of maybe where we typically see it on some of these other active weeks out there, but a pretty active week. And nonetheless, like I said, we're hovering at about 577 in that front future coming into showtime. And it is that front D's future where all the action is. It doesn't look like there's any weeklies out there in nat gas right now. So we effectively have a almost 30-day contract, 27-day contract taking up 41% of the paper this week. So let's hang out there, see what's going on from a vol and a skew perspective out there. The vol, if you're wondering, it has been in triple digits of late out there in nat gas, and it's hard to argue that isn't warranted, listeners. This is a very volatile product. The vol has come in a little bit since our last show. It's down about 9 points to a little bit shy of 92, 91.87 coming into showtime. So still very volatile. A little bit more volatile than everyone's favorite volatile product, Bitcoin, out there these days. So still very volatile, still very juicy. Skew-wise, we are seeing the puts this week, looks like getting a little bit cheaper, which is interesting. The puts last week, 6.7% cheap, so they were discounted to that at-the-money vol level I just mentioned. This week, they are 12% cheap, so coming in aggressively. Last week, the calls were where the action was to the tune of 9.5% rich to the at-the-money. This week, nearly 13%, 12.8% rich. So we're rallying. The calls getting bid and the puts are getting offered out there, which is interesting in terms of what is the most active contract out there this week. If you said it was the 4 even puts, yes, so roughly $1.75 in the other direction, listeners, you would be the winner chicken dinner this week. Over 16,000 of these going up this week. The most active day actually today, 5,500 on the tape today. 4,700 yesterday, 4,500 on Monday, and 1,500 on Tuesday. Seems like most of these days were biased towards opening. Obviously, we don't have the numbers for today, but a lot of action out here on the 4 even puts. That's not the strike I would have expected. I would have expected maybe a little bit more at or out of the money call strike leading the dance, given what we've seen out there. But that is not the case. Number 1, the 4 puts. Number 2, right behind it, the 5 puts. So 13,500 of those on the tape. The most active day, Tuesday. About 4,700 on Tuesday, 4,500 yesterday, 3,300 today, and about 1,000 on Monday. Again, kind of biased slightly towards opening, but again, we don't know the numbers for today. So interesting stuff here on the options front. You got to go drop down all the way down to pretty much the number 5 spot to find your first real sizable call, and that is the 10 even calls. 5,700 of those going up today. Pretty much half of that, or this week, I should say, half of that today. So the 10 calls, these are strikes, not what I expected at all. So interesting stuff. That's why we crunch the numbers, listeners. Sometimes it's not what you expect out here. Let's go a little bit further out to see if we see any other interesting or aberrant paper. The 3 puts are trading pretty actively in March. About 5,000 of those on the tape, also trading pretty actively in February of next year. 4,500 in March and about 2,700 in February. Again, reflecting some of that winter premium probably going to start to come off around that time. But, if that's not rich enough for you, you want to go out to April of next year. The 8 calls traded nearly 3,000 times this week, including pretty much most of that on Wednesday, 2,300 of that on Wednesday. A little bit biased towards closings. Maybe some folks taking some 8 calls off the tape. But either way, it is strange paper afoot out here this week in NatGas. That's why we have to run the numbers, listeners, because you never know what you're going to find out here. Otherwise, it's a lot of strikes you might expect going farther out, 3 calls and 3 puts kind of dominating the tape. But closer to home, it gets a lot weirder. Dan, were those the strikes you expected? Because they certainly weren't the strikes that I expected, sir.
No, not at all. It kind of defies the price behavior that we've seen over the last few weeks. I totally agree with you. I would expect them to be, the calls to be a bit lower and the puts to be a bit higher, actually. No, those kind of mystify me. But what's fascinating about what you give us into, and that is that insight into what's going on with the market. What is the attitude? And that's what I think we see with these options. What is the general belief? How are people either taking a, what would you say, speculative position, or are they taking a hedging position? That's all built into these things that we're looking at. Excuse me. But from a speculative point of view, I don't understand the logic of the puts or the calls. 10 strike on the calls. Somebody's pretty optimistic, and I think the skew that you took us through, that part kind of makes sense. The fact that they have calmed down in some ways, if you look at our behavior, again, since October 1st, or even at the last week of September, we have been in that sideways move. So to see some of that kind of lighten up a bit, I think that makes sense, based upon how the market has behaved. But boy, this longer term outlook that we're seeing here, the attitude, really does mystify me. I'm surprised we have a down day today. And then, Mark, then it'll be interesting to see what happens tomorrow. Because we're down today. If they come off tomorrow, if they close weak, I think that tells us something about how people felt going into the weekend. Or on the other hand, in other words, they're going to stay short. On the other hand, if we break, let's say we kiss 550 tomorrow, and then we back up towards where we are right now, about 573, 77. If we do that, then it says somebody bought the break. The question would be, is it sellers buying to take profit, or has it gotten cheap enough that now buyers are coming back into the market? If we see that bounce, then I think Monday and Tuesday of next week will be very important. And what you'd want to see by the close of Tuesday is this market trading above 620. If you see that kind of action, that would be the right kind of behavior for a possible move back to the upside.
Interesting stuff. CME tweeting out in their energy report not long before showtime here. We were talking a lot about European demand driving up a lot of U.S. NatGas prices, but they're saying here that this shortage in China now is getting so dire that it's actually causing Chinese and Asian buyers to actually pay up to divert some of our LNG shipments from Europe to Asia. So it's a bit of a bidding war over there for who can get our gas. Again, another reason why these prices are getting so out of hand out there. A lot to watch in the NatGas space. I have a feeling we're not done with NatGas by a long shot. I got a feeling we'll be talking about it again here on the show. But there are a lot of other products lighting it up this week, including quite a few ags in our light side movers and shakers. So I think we'll head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the world of ags. You guys know where to find that in the drop downs. Go back out to that asset class. You were just hanging out in energy. Bump it up. It's all alpha order, so ags are first. So go up to that top one. Go into the grains and oil seeds. You can find most of our friends out there. Again, we had KC wheat number 4 this week, up 6.15%. Corn number 3, up 6.62%. And oats taking this top spot this week, up 8.26%. Dan, a lot going on in the world of ags. You can take those in any order that you like, sir. What's been lighting up your tape in the ags world this week?
Well, let's start with corn. And that one is also one that kind of mystifies me. The fundamentals and the price action that we're seeing, I don't think totally match up, except for just the last 3 days. And the reason I say that is we've basically been in a sideways move here in this market. Well, if you go back to July, we've been between, 520 or 510 on the downside to 570 to 580 on the upside. And right now we're around 563. I do think the bias is for a move to the upside, and the reason goes back to fundamentals. I think the global demand, if you go back to our friends in China, when they go out to buy our products, they look at our marketplace just like you and I do when we go to the grocery store. They say, where can I get the biggest bang for my buck and who's got the best quality out there? Well, corn is number 2 yellow corn. If they look at United States, Brazil, and Argentina, and they say, okay, where can I get the best bang for my yuan, I guess, in that regard. I think the demand is still here for U.S. corn. If you look at if you look at their meat industry, that's where this goes. Over 90-some percent. Well, it depends on what numbers you're looking at, but a vast majority of our corn that we're talking about here goes to animal feed. And we use about a third in ethanol production. So that's bean oil. But if you look at what's happening here with corn, I think it's the beginning of a potential move here to the upside. Now, if buyers are here, if that's what we're seeing, then we need to see behavior that dictates that. And that would imply beans over the $6 level by the end of next week. If buyers are here, that's a ways away. It's about 30-some cents away for this market. Doable, but that's the kind of action I think we want to see in corn. It's really an interesting market in that regard. I just think it has that upside potential. I think the fundamentals and the price action supports that. If we talk about our friend Mr. Oats, this market's truly amazing. Going back to July, where I said corn kind of went in a sideways mode, well, we were trading below $4 back in July, and now we're above $7. This one has been a very orderly move. And again, this is also used for, animal feed. And what we're seeing here is a very orderly trend. And there's no indication other than the last couple days where we are slowing down a bit. And we're above $7. So do we want to be cautious up here? Sure. Could this actually back off a bit? Yes. Would we expect buyers to come back in? In other words, more of a profit-taking type mode, which we've seen in the past. We saw that in August, and we saw it again in September and in the first part of October. So if this would back off the way it has been behaving, is it implies buy the break. The market teaches people how to behave. And if you had been buying the break every time it did that, you would have gotten paid for it. So, from my point of view, if we do lighten up, say tomorrow we do trade below and close below $7, then as we get down towards that 670 to 650, behavior there will be important. It shouldn't take more than 3 to 4 days. That's what the rhythm has been in these markets when we've seen it break. 3 to 4 days, and then we have a tendency to go back up. So if that rhythm's in place, and we're down near that 650, 670, and we could use your guidance when it comes to looking at those calls. What is the behavior we're seeing if the market gets down towards that range? If we are a buyer, if we put ourselves in a long position with options, for example, however we want to do it, spread or an outright, it'll be important to get back above $7 within the next 3 to 4 days. If you don't, it implies a sideways move if by chance we start going back up. So oats is really a very interesting market. People usually do not look at it, but it's one that's had one heck of a trend.
A lot to unpack there. We'll start with the big dog here, which is corn. Listeners, again, go out to that drop down. Ags, grains, and oilseeds. You see corn right at the top of the list there. It's kind of hard to miss. Very active week this week. Over 500,000 contracts on the tape. 514,000 to be precise. So corn is the big dog. There's a reason why we say if you're going to go out in the ags, corn's a great starting point. It's deep. It's liquid. You can get paper for days out there. And a week like this, it's going to do a lot of volume. Coming into showtime, we're seeing that front future at a 563, listeners. That's up about 25 handles exactly, about 4 3/4% just this week. Again, going back to the end of last week's show, up 6 2/3% since last week. So a lot of action to the upside in corn this week. In terms of the action, by the way, we said we're doing over 500,000 contracts. Over half, 57% of that paper coming in the DEES contract. That's a lot of paper. Closing in on 300,000 contracts just in DEES here in corn. If you're wondering, by the way, what the corn vol is, about a 24 and a third. It's up nearly 4 points, 3.8 points this week. So getting frothy, getting juicy out there, but still a far cry from a Bitcoin, or even we were just talking about NatGas, both of those flirting with triple digits. Not quite at those levels for corn. It's more along the line of, shall we say, a small caps or equity vol out there. In terms of where the skew is lining up this week, last week the puts were a little bit cheaper. They're about 2.8% cheap. This week they are cheaper still, 4.7% cheap to that at the money, roughly 23 vol. Last week the calls were where the action was, 7.2% bid over the at the money level. This week still bid, but a little bit less, 6.4% rich. And in terms of where the action was this week, actually, I take that back. I was looking at Jan. Let's go out to DEES. That's where we wanted to focus our gaze. And the puts last week were effectively flat to the at the money. They're about 0.25% bid. This week, the puts have swung cheaper in DEES, nearly 2%, 1.9% cheap to the at the money. The last week, the calls were 5.7% rich in DEES. This week, they are 4.3% rich. So coming in a little bit on the heels of this move we've just seen. And in terms of what was the most active contract out here, I said we're at a 563 coming into this segment in that corn front future. It was the 520 puts doing the lion's share of the paper this week, nearly 31,000. The most active day is kind of a tie between today and Tuesday, both over 10,000 contracts on the tape just in both of those days, nearly 7,000 on Wednesday and 3,000 on Monday. And most of that ever so slightly biased towards closing. It seemed like we had a lot of back and forth on this 520 put strike throughout the week. So that was number one by a pretty wide margin, listeners. The next most active contract was the 580 call, which makes a little bit more sense. It's a slightly out of the money call at this point, doing 22,000 contracts. The most active day was yesterday, roughly half of that, about 12,200 on the tape yesterday. And then the rest of the week kind of slightly active. Today, the other second most active day, nearly 6,000 contracts on the tape. Again, the rest of the week kind of light. So action there. Then number three, we have the 600 calls. Again, one of those psychologically important levels, doing about 20,000 contracts. The big day, Wednesday, 9,000, and today about 8,800. So pretty close yesterday and today, and the rest of the week kind of light. So interesting stuff afoot here. Let's go a little bit farther out to see if we can see any other interesting and or aberrant paper. Now, the ags aren't quite like the metals where we see any given week some crazy upside butterfly or something else going up in a gold or a silver. Ags are not quite the same type of product. They tend to have their liquidity gathered and focused around a few expiration cycles, and that seems to be the case. There's a decent print of the 600 calls going up this week as well in March of next year, 14,000 of those. That's pretty sizable out there. Aside from that, I should say, not a lot of other interesting and or aberrant prints out there. Let's hang out in ags again really quickly. We can't really talk oats that much because there really isn't a lot of options paper to sink our teeth into out there. So unfortunately, not the big dog out there. And also not a lot of paper in wheat, but there is a fair amount. You got to go to the SRW wheat. It's KC wheat that was moving this week, but we'll hang out in the old SRW wheat instead because I actually did about 100,000 contracts this week. Really quickly, coming into Showtime wheat at 773.5. That's up about 17.5 points or about 2.3% here in the SRW wheat since Monday's session. Of all that paper, let's see, how much paper was it? About 100,000. 2/3, almost 63, almost 64% going up in the DEES contract, and looks like the 800 calls. So slightly out of the money calls taking it this week with about 12,000 contracts on the tape. That was kind of the big print. Let's look really quickly at the vol and the skew. Then we got to keep on rolling. Other products to cover here, listeners. The vol in wheat, a little bit frothier than corn. It's at about 26.25, up about a point from this time last week. And in terms of skew, pretty big swings in the skew and the put skew in particular. Last week, the puts were 1.9% cheap. This week, 6.3% cheap. So the puts coming in aggressively. The calls last week, 2.8% rich. This week, 1.7%. So the calls coming in a little bit as well. Puts getting cheaper and calls coming in a little bit this week, which is interesting. As we keep on rolling, it's that time, listeners. It is time to break down some equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, you know what time it is. Time to break down what's going on in your favorite equity indices. Before we can talk about the movements and the paper and the order flow, we got to see what's going on from a vol perspective. And coming into Showtime, we're seeing a little bit of movement from last week, not a ton. The equity indices are kind of bouncing around a little bit today, mostly to the upside today. Coming into Showtime, we had RVX, so the VIX of the small caps at about a 22, almost exactly, up a little over a point, about 1.25 points from this time last week. We had VIX at about 16.33, up about nearly a full point from this time last week. VVIX, so the vol of volatility, how volatile is VIX really? It's at about a 105 right now, so that puts it up a little over 2 points from this time last week. Vol Q, which is the at-the-money vol of the NASDAQ 100, at about a 16.20. It's up about 0.75 points from this time last week. So this puts those spreads a little bit wider this week, not a ton. We have the VIX to RVX, so the large cap to small cap vol spread, nearly a 6, about a 5.75. That's about 1/3 point wider, not a huge swing from this time last week. Both RVX and VIX kind of moving in the same direction and to about the same extent this week. And VIX to Vol Q, that spread has kind of hung out at and nearly unched. It's about 0.15 right now. That's a little bit wider than last week, but again, not a huge amount of daylight between VIX and NASDAQ vol at the moment, which is kind of interesting. Dan, a lot going on in the world of equities, including today. What's been lighting up your tape out there this week, sir?
Well, it is interesting. And I think part of what we're seeing here is the attitude of the market, I guess is the way I look at it. We have a lot of earnings coming out, and that's over 80% in the S&P 500 have beaten earnings estimates. So that adds a certain bias, I think, to the thinking of people. And what's the alternative? If I don't put my money in the stock market, where should it go? And that's also an issue here that I think we're witnessing when it comes to looking at these indices. And I think we've also learned something over the last few months in terms of our country when it comes to supply and our sensitivity to that supply. We talk about the lack of truck drivers, for example. Over 80% of the truck drivers are over 48 years old, and we don't have a new generation coming through, at least not at this point. We see what's happening out there in the West Coast, where 40% of our incoming imports come through California. But it's a multi-level issue. The idea of it operating 24 hours a day, 7 days a week, not a bad thing, but it's not a solution. I mean, they're running out of room, that literally, and they're trying to get other land, because not only when you have containers going out, eventually they come back. So where do you store the empty ones? And that becomes a challenge right now that they're trying to deal with. There are some trucks that do not meet California standards, EPA standards, that cannot drive in California. So that can limit some of the vehicles that can even come in and pick up some things. So we have a number of pieces of the puzzle there that I think people have now gained an appreciation to supply and supply lines. We're used to just walking in the store and seeing stuff we want. Well, we're finding out in some areas that's not the case. You want to buy a new car? I know a fellow who's going to buy the new electric Mustang for his wife. He went in and they said, "Yeah, we have these cars." They had one car there. And they said, "Well, we're estimating 6 to 9 months before you might be able to get one." So it's not typical what we're used to. But let's go back to these indices. What is it telling us then? What is the attitude of people? Well, we know a couple things. One, our economy is not turned on yet, not completely. And the global economy is not fully turned on yet. We see people with capital, with money, and we see people willing to spend that money. If we look at home sales and other things pending home sales was down just a tad bit. But if you look at new home sales, that demand is there. If you look at durable goods, things that last more than 3 years, so appliances and things of that nature, are people willing to spend money for a long-term item if they're unsure about their future? And we look at where the supplies are. And people talk about inflation. Mark, we should have inflation. It makes sense. If we think about supply being tight, if we think about manufacturers having to increase prices, if we think about people who say, "I want more wages, I want to increase," and so they get that. Well, what happens? It does increase the price of things that we look at. So should we have inflation? Yes. Is it transitory? Well, nobody really knows the answer to that, but I think it could be. I mean, are people going to give up increases in wages? No. But if the supply demand situation does become more imbalanced, if supply is there, could some of those prices get adjusted? I think they could. So right now, the idea of inflation, I think, makes sense. We should have some. What we don't know is where are the magic buttons for the Fed? When does the Fed say enough? It's gone too far. We're going to do something. And how long are they willing to allow that to go? They're expecting inflation to be here through next year. That's the indications. So that's another variable out there that you and I need to monitor is what is that action? And, we saw how the currencies reacted in Europe with the ECB saying, we're going to leave our monetary approach alone. We're not changing anything. So I think the same thing's expected here. At least I don't expect the Fed to do anything. I don't think they have any reason to do that, not at this point. I think there's confidence in the markets, and that's what we're seeing here now. It'll be interesting also to see how it closes on Friday. Are people willing to hold long positions in these indices on Friday? And I mean the whole gamut from the S&P to the Russell. In the S&P, we'd want to see it closing above that 4590. In the Dow, ideally above 15,800. And our friend, I said the Dow, I meant the NASDAQ. The Dow 35,650. The Russell, we'd want to see it closing above that 2310. If we could get that kind of commitment, and I think that's what it is, it sets things up well for next week. One more thought, Mark, and that's because we're looking at futures. And as you know, these things trade almost 24 hours a day. So if we close, however we close on Friday, it means, I should say this, I think of the market breaking down by time zone. So when you and I finish in the US today at 5 o'clock Chicago time, Asia starts to trade. And about 1 or 2 o'clock in the morning, Europe starts to trade. That's how I think about these markets. So let's go back to these indices. If we see a strong close on Friday, remember, Asia has not had a chance to react to that. So Sunday night, 5 o'clock Chicago time, what you want to see is you want to see that buying that came in on Friday, if it did. You want to see it continuing Sunday night. You want to see Asia opening up and moving higher with some confidence. Europe can go sideways. The U.S. session, again, you'd want to see follow through to the upside. So I think those are some clues that you and I could look at when it comes to these indices. I think the numbers that you've given us in terms of the options, I think that's reasonable too. This one, I think the pieces kind of fit together a little better than what you and I saw with corn.
Let's see if the pieces make sense out here in the small caps. Listeners, head on over to that drop down, get back out of ag, scroll down to equity indices, go into the E-mini Russell 2000. You'll see they're keeping a pace. They're actually moving quite a bit out there today. One of the larger percentage-wise movers and shakers, at least for today's action versus what we've seen out there of late. We didn't see a lot of action in some of the broad volatility products today. We didn't see a lot of action in terms of even, the S&P products not doing a lot of paper today. But small caps moving today, even though net on the week, it's kind of been a lot of nothing. I pretty much unched from Monday's session. Again, a lot of back and forth, but net unched coming into showtime, though. Pretty decent paper. We're seeing well over 20,000 contracts on the tape right now. The lion's share of that, as it is in most weeklies, going away in about a day. So 27% of that paper going out in about a day. Let's go. Oh, we go out to 8 days and get another 17.5%. Let's go out to, let's see. We got the week 3 November out here. That one has some paper as well to the tune. Let's go out to D's. 20% of the paper going up in D, so we can hang our hat out there. And we know that has 49 days to go. I know that's not exactly always the tail of the tape. In small caps, people like to get a little bit nearer to expiration, but it's kind of hard to parse some of these contracts that are so close to going the way of the dodo from a vol and a skew perspective. If you're wondering what is D's vol right now in small caps, it's hovering just shy of a 20, 1992. And again, that's a little bit shy of what RVX is telling us as well. But RVX is kind of that rolling 30-day VIX methodology just applied to the Russell 2000. This is straight at the money vol out here in the D's contract. By the way, the Russell 2000 coming into showtime at about a 22.88. Like I said, kind of unched on the week. And in terms of put action and just skew in general, we have been talking for a while about how rich and how crazy those put skews have been in most of the major equities. They have come in a little bit, getting a little bit juicier, though, again, this week, getting some of that back. Last week, they were 15.8% rich. Remember, on recent shows, we've seen them north of 25%. So seeing a little bit of a change there. But this week, 17.2%. So getting some of that bid back, which, again, I know a lot of you out there like to trade in the put wing. If you're out there writing puts, higher put levels, not exactly an unwelcome phenomenon. If you're out there trying to hedge, it makes it a little bit more difficult. In terms of the call wing, last week, 10.8% cheap to the at-the-money. This week, even cheaper, 12.5%. So the call's coming in. Puts getting bid up a little bit net on the week. And in terms of where the action was, it's going the way of the dodo. You folks love these small delta calls. And just through virtue of they're going out tomorrow, they're small delta, but they were pretty close to at the money. The 2,300 calls were pretty much the lion's share of the business this week. Let's see out there in that front week. It was a close fight for number one. It was those and also the 24 halves in November. going out in 33 days. Those did about the same amount of paper out there, and those are a little bit smaller delta. So there still is some fascination for these quote-unquote small delta calls out here in the Russell 2000, even if a lot of that has shifted into very near-dated paper out here. Not seeing the weird, aberrant equity put prints. Let's just see really quickly. Let's go out to the E-mini S&P 500. One of the talking points we've had of late are these, shall we say, strange opening far out of the money puts going up with a day or two to go in the E-mini S&P 500. Let's see if we can find those again this week and see if those are once again a frequent offender. I mean, there we go. Yes, we're at about a 45.79 listeners, and the number one most active, it is indeed the 38 quarter puts. So once again, these puts are trading here in the S&P, opening on Monday, 36,000 of them going up. I don't have the prices here, but if it's in par with what we've seen on some of our other executions, it's going to be for around a nickel somewhere. So once again, these puts are trading here again. We speculated, or I should say Russell speculated on the show last week. He thought it was some opening premium harvesting. That could certainly be the case. We have seen stranger things afoot out there. Imagine 38 quarter by the end of the week. That would be quite the sell-off in the S&P. But once again, if you're wondering, are those crazy out-of-the-money puts going up in the E-mini this week again? The answer is yes. And what else has been crazy of late is everything going on in the world of crypto. You guys have questions, so let's get to those next.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to your feedback segment. You guys clearly have questions about crypto, but if you're listening in our live chat, you're part of our secret club listeners. You get bumped to the top of the list, just like Mr. Unlimited here. He has a question for you, Dan. He says, so Dan, if the job market is filled and then people get to work and the supply demand is met, what would be slowing and or holding the market back? If there would be anything. I'm not saying that the market is going to stall or that it shows signs of it. So he wants to know what would slow or hold the market back if we have people getting back to work and the supply demand for labor is met, sir?
I think it's positive for the market. It adds some fuel to the fire. So if we can turn our economy on and we get those people back to work, right now we have more job openings out there than we have people looking for jobs. But if we get that labor force back engaged, get near that, low unemployment, and if we can also get the physical supply demand situation sorted out, I still am bullish on this marketplace. Again, where's the alternative is what I think about. Where else are you going to put your money? And is it interest rates? Well, there's not much of a yield there. Is it metals? Is it gold or silver? Well, they've kind of been in a sideways move. We haven't really seen them react the way they have in the past. Is it other commodities? Is that what's driving crude oil? I don't think so there. And there I'm kind of suspect of it because we have a lot of supply out there, I think. So I still look for further movement to the upside. Now, I know we are at a stretched out levels, but, I still stay on the bullish side for our equity marketplace. If all those things that you just mentioned, which are very good points, come to fruition.
All right, Dan, you're a popular guy. We've got more questions for you. This has kind of been the question du jour over the last week and change. Everyone's got BITO or BITO, the ProShares ETF, on the brain. Henry wants to know, another one of our secret club members, he says, what does Dan GRAMZA think of the new BITO ETF? Does he like the future structure? And is he concerned that it's already hitting position limits and that it may have substantial drag issues? So, Dan, haven't had a chance to pick your brain on the topic du jour in the crypto world these days, which is, of course, this new ETF. All of the issues that Henry laid out have been interesting to watch, the drag, the position limits. So what are your thoughts overall on this product? And then if you have any other thoughts on the kind of specific issues he points out, the position limits and the roll yield or the drag, have at it, sir.
Henry, those are excellent points. I really like what you brought up. And you're right, Mark, we haven't had a chance to really kick this topic around much. First, I am concerned about position limits. It is a reality when you talk about futures. I was involved in the development of a currency ETF, and we stayed away from futures because that was one of our concerns. There are some limits in some markets that you have to be aware of. Plus, you're taking inventory out of the market when you do that. So that's something that does have to be dealt with, and it hasn't so far. So what does that do? Well, it tightens supply because market makers, APs who have creation units, need to go and get creation units, I should say, from ProShares. That's going to be a problem. So it would imply the possibility of, I don't want to say false, but a rally that doesn't have a lot of legs behind it already. So yes, I do think that's a challenge when you embed futures into an ETF. It's something that's the nature of the beast once you do that. The other issue, which they're probably going to do, I'm guessing, is start rolling forward. In other words, they're not just going to look at the front month. They're going to try to go out further out. But which is fine. But if you look at Bitcoin as you go out in the futures, there's not a lot of volume out there. We see that in some of the ETFs on the energy market. I think if you look at OIH or USO, some of those markets, well, they do use the futures contract and they do roll out so they can get some of that liquidity, and there's less of an impact when they roll that contract. If you have a normal market, a contango market, where we know that as we go out in futures, the prices go higher due to storage cost or whatever this is that drives that market, those additional items, the cost of carry. That means that when my contracts expire, I'm going to pay higher to that next contract that I'm going to put in my ETF. So yes, Henry, you're right on target. That is a challenge. And it goes with the idea of embedding futures into an ETF. Not against that idea. It's just there's some considerations that we have to put around them. And I think you hit right on the right buttons when it comes to things that we should be aware of when it comes to this Bitcoin ETF. Now, for it to have huge volume, the market acceptance is there, isn't it? Henry, we've seen how the markets reacted to this idea of an ETF. There's a few other things that drive a market. For example, in the future, first, futures and an ETF for Bitcoin. It now puts a regulated environment around an instrument that people may want exposure to. So that's a biggie. All right. So now people want to invest in it. Let's talk about who some of those people are. There's people like you and me, private people that may want some of that. But there's also institutions. Some institutions can trade derivatives. Some of them can't. If they can't trade derivatives, though, they can trade securities. And that could be some of the order flow that we see coming into the ETF. And so for a fund who can only trade securities to want to have some Bitcoin exposure, excuse me, see, it chokes me up thinking about this. It wouldn't be surprised to see that. So I think that's also some of it. They're going to want some in their portfolio. At the end of the year, they can say, look, we have a very broad portfolio. We have some Bitcoin. And here's how we did it. So there's a lot of moving parts here. And Henry, thank you so much for that question.
Great stuff, Henry. We mentioned on the show last week, me and Russell on, all this news was obviously breaking. We had a flash poll earlier in the week where we asked you guys right after it listed, you guys plan to trade the new ETF, and our audience was exactly split, 45.5% for yes, 45.5% for no, and a little over 9% saying they're not sure yet, which is interesting. We updated that, put a new flash poll out during the episode last week. I forgot to pay off the results during the show, but we thought now that it was live, give you a little bit more, and you've seen it trade a little bit, get a more live update on your thoughts. And that poll was even more, I shouldn't say even more, slightly more biased in one direction. 55.6% saying no, and 44.4% of you saying yes. So interesting. The no's have it. Maybe if we did that poll again after a week, and now that the options are live as well, maybe that would be different as well. But interesting stuff afoot out there. All right, everybody. Thanks for all those questions. Unfortunately, that music means we're out of time for your cues. That's going to bring to a close, I should say, our broadcast week for today, or a broadcast day. Getting ahead of myself. That brings to a close our broadcast day here. But don't worry, we got more in store for you tomorrow. Coming back at you noon Central, 1 p.m. Eastern for volatility views. And then after that, for all you Secret Club folks, I see you in there debating Floki versus Shiba Inu. Floki, the latest great pump and dump in the crypto land. I see it's trending on Twitter now. Someone's got money to buy ads to pump up a token. That always makes me a little dubious. If you did that with security, you probably go to jail. But in crypto world, nobody cares. That's a conversation for another day. But again, you can check it out tomorrow right after that, 2 p.m. Central, 3 p.m. Eastern for Options Oddities. If you haven't joined the Pro Club yet, get in there before the show. You can also get in there for the October drawing of our Pro Trading Crate over there, theoptionsinsider.com/pro. And Dan, where should folks go if they want to check out all your videos? They got to imagine you're hot and heavy on all the different areas, including perhaps crypto these days, sir.
Well, excuse me. DanGramza.com. There's a free video I do every day. We're doing it this afternoon. I look at 22 different markets, stock indices, currencies, interest rates, metals, energy, and ags. And I pick different markets you can look at that we can talk about. And the idea behind it is if you've never traded futures, maybe a place to begin is just to watch them. The other part of it is if you only trade stock indices, there may be other complexes that you might find interesting. And one of the things to do is to look at it for a while. And what you get is my commentary as I go through it. You see red and green lines, which represent buy and sell levels. I call them bullish and bearish levels, but these are not trade recommendations. These are just my thoughts. I'm trying to share with you how I would approach some of these markets.
There you go. DanGramza.com is the place to go. GRAMZA, the place to go to kick the tires and light the fires. Of course, you know where to go to get access to all of these reports and a whole bunch more. CMEgroup.com/TWIFO or /TWIO. Both great places to go to get these reports and everything else cooking in the land of futures options over there at CME. And of course, if you want more data on all things small caps, the volume, the volatility, what's going on from an overall COVID impact perspective, they still have that great COVID data hub over there and a whole bunch more. FTSERussell.com is the place to go to kick the tires and light the fires. Give them a follow on the old Twitters as well at FTSE Russell. And of course, we'll see you back here tomorrow, Ball Views, right after that for Options Oddities. We kick it all off again next week with the Option Block and the Crypto Rundown all the way through to another Thursday and another episode of This Week in Futures Options. We'll see you then.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.